Rate went down today, but once again, the drop was marginal. The new rate is 17.08%. That's only 6/100ths of a percentage point lower than last week. Chartered banks are unlikely, as a result, to lower their prime rates. There'll be no relief from 15 and 16% mortgages either. Although, as Fred Langen reports, those high rates don't seem to be frightening home buyers.
I think if you have to buy a house, and that's what the mortgage rates are, what are you going to do? You have to accept it. And of course it bothers you. The payments are high, but you can't do anything else. Those are the rates.
On a $50,000 mortgage at 10%, the payment would be $447 a month. But at 15%, and that's a good rate today, the payment is $623 a month.
I don't think people think that we'll ever see 12, 11 again. Maybe even not 13.
A year ago, when interest rates started to rise and mortgages began to climb to 15 and 16%, the mortgage market dried up. People were not borrowing money. But now that has changed. Banks and trust companies report an increased demand for mortgages at 15% and more. That means that Canadians have learned to live and pay for inflation and high interest rates. Fred Langen, CBC News, Toronto.